Good morning, everyone. This is Doug Campbell with Right Way Options and your morning market preparation video for July 18th, 2017. Well, yesterday we saw some choppy price action. We really didn't move around much. It was just a very small range chop. Nothing that was honestly all that surprising. It was just a rest. And honestly, I feel like it was pretty darn constructive overall. And I think what the market might have been doing is just simply waiting for some of the big earnings that were expected, after the close and this morning, to maybe find some inspiration as to where it's going to go from here. But when you look at the diamonds here, you have to look at this as a very constructive pattern. We've moved up above resistance and we've held it. In fact, we seem to have lost the whip that we were experiencing in here, all of that big price action whip that went back and forth. That's not occurring here. So that is a positive thing and a good thing for those of us that are swing traders. So diamond's looking good. Let's take a quick look at the SPY. Oh, hold on. I got a delay in my chart here. The SPY held up very well as well. It pulled back. It started off strong during the day and held up most of the day. Ended up pulling back slightly. But we have to, look at this and say we have held price support at least to this point. And a pullback would not be harmful to this chart here. A pullback would actually be healthy and then give us an opportunity for new entries into the upside. So we'll keep an eye on that as the morning goes on. But a little rest is warranted. And I will tell you, if we can rest in a sideways consolidation, a little tight consolidation, that that bodes very well for the market because it shows tremendous strength. It shows that the bears would not have any energy in them to move the market lower. So I welcome a little rest up here, a little pause after such a strong rally. Let's take a look at IWM. Now, IWM, this doggone thing, added just another day to its construction of this resistance area. This resistance area right in here is apparently extremely strong. And as you can see, we have tested it multiple times. I went through that yesterday, and yesterday was another test of that level, and it just couldn't make it through there. Now this morning it's showing that IWM is gapping lower. So one more time, this looks like it could serve as a rejection of this level. I don't know how many times we can continue to test and fail this before we really start moving lower here in IWM. But right now, the market seems to be holding up relatively strong. So I have to assume that IWM will stay kind of range bound here, unless we really start to sink, and then look out below on IWM. This is just, a triple top, and you can add this one to it. That could end up being, here, let me just draw this out, could end up being whoops, I drew one too many arrows. Could end up being a W pattern, a double bottom, and a breakout here would be fantastic. A breakout in a test would be awesome. But if we fail here, that will prove to be just a triple top. And this could switch either way very quickly. So be careful of IWM. When we look at the Qs, the LQs rallied up here to resistance. putting in a bit of a shooting star pattern right here at price resistance. A little bit of a concern, but not huge. A little pullback to test one of these levels in here, possibly right in here or down in here, and hold this downtrend line as hold above it would be very positive. So any pullback, and it wouldn't be odd to see that pullback occur after essentially 7 days up. A pullback should be expected, and any rest in here would be great. Now if this just happens to consolidate across here, awesome. That just proves the strength of the index, that the bears have no energy, and we should break to the upside if that is the case. So very constructive overall on the day. Let's take a quick look at the VIX. Now, this is something that, you know, concerns me, and I mentioned it yesterday, that we are down here very near historic lows. No fear in the market, which suggests complacency. When we have complacency in the market, we tend to make very sharp moves to the downside. And if we back this chart up, notice how unbelievably clear this line is. I mean, we've touched these tops. It's phenomenal how that's working. If we happen to see some fear well up in the market, we'll have to watch this line for resistance, and a breakthrough here and hold above here would be really bad for the market. So let's be careful, and just be, well, I shouldn't say be careful, but let's be aware that when we're complacent like this, big moves are possible. So, you know, be watchful of that. Be watchful of potential reversals, okay? Let's take a quick look at Netflix. Netflix reported earnings yesterday, and their guidance was way above market expectations, and so they're gapping up huge this morning. That should help. Should help the Qs considerably, bringing that one up so far. Also, if we've had earnings this morning on BAC, Bank of America has already come in. That Bank of America earnings is disappointed. Even though they beat on earnings, they've disappointed the market, it looks like, and we're going to gap down here. And Goldman Sachs, Goldman thumped on earnings and beat strongly, but here again, the market is just not impressed with that, and we should open right about where we close. At least that's where it's suggesting right now. So we're not getting a whole lot of love in the futures here, and that could change after the market opens. But as of right now, investors seem somewhat unimpressed by the earnings report. Futures are holding, Dow futures are holding just 6 points up, while the ES futures are down. The NASDAQ futures are down. On the economic calendar today, we have three reports that are important, but not really that significant. They're not big market moving reports. First is import-export prices at 8:30 this morning. We have the housing market index at 10 o'clock, and then the Treasury International report at 4 p.m. today after the market closes. And let's keep in mind we have a lot of earnings on the calendar today. Over 40 companies reporting, and that's only going to ramp up over the next couple of days. So be careful. Make sure you're paying attention, checking earnings reports prior to entering a trade. Okay? You don't want to be caught by surprise, either in the stocks that you're holding or the ones you are intending to trade. Another big report this morning is J&J. It looks like J&J must have come come out with a good report, not super good, but good enough to make the market want to, or make the stock want to gap up here a little bit. And another report this morning, Harley-Davidson, doesn't look like it's reported yet. So we've got kind of a, looks like we've had good reports, but the market is just kind of unimpressed with them. And now Goldman is signaling a little bit lower. It's fading here. And so are the futures. Dow futures now up only 1 point. So we're going to have to be a little bit careful as we approach this market today. We could get some bearish action. It's also possible that we could get the kind of action that we saw in Citibank and JP Morgan. Initially moved down, but dip buyers brought it right back up. So everyone, be careful, be cautious today, watch carefully, and I wish you all great profits today. There's a lot of good charts out there, but be patient and wait for them. Don't chase them. Please do me a favor. If this is the first time you've seen one of my videos, do me a favor and click that subscribe button and that like button and follow button on Facebook. I would appreciate it. And other than that, Right Way Options, we will be doing our class normal time this morning. Everything is good to go. And I will see you all then. Take care, and I will talk to you all soon.